Good morning, everyone. I'd like to call the meeting to order, acknowledge that we are in Treaty 1 territory, the home and traditional lands of the Anishinaabe, Innu, and Dakota peoples, and in the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. With me on the panel today are Ms. Adila Del Oro and Ms. Linda McFadden, both joining via Zoom. Our assessor today is Ms. Sharon Tang, and our administrative personnel is Mr. Zachary Mohan. My name is Bill Moreski. I will be chairing this meeting and the panel. To the Zoom participants of the meeting, please note you are placed in the waiting room until your property is called upon. When it is your turn, you will be admitted into the meeting. Kindly follow along on the City of Winnipeg's Board of Revision YouTube channel for the hearing process. Once the host admits you into the hearing, please close or mute your YouTube player. You will then be permitted to speak with respect to your property. Once your hearing has concluded, you can leave the meeting. We will be hearing applications for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested have been described in each application, and we will limit discussion to those matters. The statements that are made at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be advised that comparisons of assessments of properties are not considered evidence of market value by the Board of Revision. The Board of Revision is appointed annually by Council and is independent of it and the City Administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note that the Board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of King's Bench if the matter pertains to the application of exemptions from taxation. Should you wish to appeal, information on how to do so will be included with the Board's order. With respect to the hearing process, I will confirm the points of appeal with your property to be addressed with each applicant following the swearing in. We will then have the assessor's testimony followed by questions that the applicant may have, and then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they wish. Once all of the evidence about an application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the Board will deliberate in private and make its decisions. You will receive the Board's decision by registered mail as soon as possible. As information, all public hearings are live streamed, recorded, and will be part of the public record. We will be hearing items 1 to 7 on our docket today. Mr. Mohan, please affirm the assessors and the applicant for the first 3 items testimony.
Of course, Mr. Chair. Madam Assessor, please state your full name.
Sharon Tang.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Mr. Applicant, please state your full name.
Chris Down.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Okay, our first item number 1, is 75 Vulcan Ridge Drive. This is an application for revision of the value of the assessment and for the classification of the property. Mr. Mohan, Ms. Tang, you can begin your presentation.
File number is 24-646. Roll number is 030930030205. Address is 75 Falcon Ridge Drive. The assessed value for 2025 is 31,400,000. The bottom of the page 1 shows the subject property information. So there are 2 buildings on the property and they're 3 stories high. And the properties were built in 2019. There are a total of 170 units and 95 outdoor parking. So we're asking for the board to confirm the property value. We are going to be sending the supplementary tax bill because there is an error while evaluating the property, and for a total of 170 units, there are 129 assisted living and 41 memory care units, and we should be using the cost approach to value the 41 units, given that there are no kitchen in the suites. And the confirmed value for the 2025, we're asking for $31,400,000. And
Okay. Mr. Down, any questions for the assessor?
No questions at this time. Thank you.
Ms. DeLauro, any questions?
I have no questions at this time. Thank you.
Ms. McFadden, any questions? You're muted. You're muted, Ms. McFadden.
Oh, no, she's not muted, Jim. We're just having audio issues.
Oh, sorry.
It seems so. I think it might be on her end. Can't hear you now, Ms. McFadden.
Is your audio on?
Okay. We could request a recess if you'd like. To address this.
Okay.
Yeah.
We are going to go into a recess for 5 minutes to get technical problems resolved.
All right, Mr. Chair, we're live again.
Okay, we're back in order. We will continue with the questioning. Ms. McFadden, any questions for the assessor?
I have no questions. Thank you.
And I have no questions. Mr. Down, you can begin your presentation.
Okay, thank you very much. So just reviewing the evidence I have submitted, I'll take the members of the panel to page 2 of the document. So this is a seniors home, as we know, in the city of Winnipeg. We just have a couple street view shots shown on page 2. On page 3, there is a aerial shot of the property. The property is also known as the courtyards at Linden Point. Page 4 shows the location of the property within the city. And then on page 5, this is a current assessment calculation for the property. Noting here that the city of Winnipeg has assessed the subject property as a apartment. That's how they prepare their assessments for, they just kind of pretend it is an apartment building, but it is in fact a seniors residence. Noting here that the assessor has confirmed number of units, everything like that. One thing we found that really stood out with the valuation was the capitalization rate. The city has assessed the property at a 4.75% capitalization rate, which from what we've seen from third-party market reports, that is below the ranges that they are indicating for properties. Noting as well that this property was built in 2020. If we move on to the following page, page 6, this is a excerpt. The Cushman & Wakefield and Collier's various real estate brokerages publish capitalization rate studies based upon what they're seeing in transactions. So noting here, this is seniors housing A, so best quality seniors housing. If you read all the way to the right, This is Winnipeg, and the capitalization rate quoted is 6.5 to 7.75. And just noting that these studies here are from Q1 2023, right prior to the valuation date. And then moving on to page 7, this is for multi-residential to low-rise, so not seniors homes, but apartment buildings. And then Winnipeg is shown at 5 to 5.75 capitalization rate. And then on page 8, we have also looked at Colliers. This is another brokerage we were able to find. And they're indicating for low-rise capitalization rates a range of 5 to 6%. So lining up with the Cushman and Wakefield apartment information. So on that, the basis of that information, the 4.75 cap rate appears too low, and to be on the conservative side on page 9, we're requesting the panel amend the capitalization rate to 5%. Net operating income is to remain the same, and then the total valuation of the property is $29,829,900. And that concludes my presentation. Thank you.
Ms. Tang, any questions for the applicant?
I don't have any questions.
Ms. McFadden, any questions?
No questions.
Ms. DeLauro, any questions?
No questions, thank you.
And I have no questions. Therefore, that concludes,
Mr. Chair, was the classification property was addressed, correct?
oh, yes, it's users. This matter is not yet concluded. Mr. Applicant, you had an application for revision of classification of property?
Yes, sir. So we had initially submitted on classification. There's nothing in my materials here about classification. As a side note, we are discussing with the assessor regarding the supplementary and the class, but there's nothing in my materials at this time about the class. The assessor has, we're discussing a supplementary at this point in time.
Okay, then he still needs to fill out the form then.
Okay, so you
Withdrawal form?
withdraw, okay, so you wish to, just to clarify, you wish to withdraw, or you wish to confirm the class?
Confirm the class, please.
Okay.
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 Confirm the class. Okay, that concludes item number 1, 75 Falcon Ridge Drive. We will then move to item number 2, 741 Sterling Lion Parkway. This is an application for revision of assessed value and classification of property. This is a cap rate only issue on this one, correct?
Correct. That'll be the same issue as before, and we'll ask the panel to confirm the class.
So, Ms. Tang, you can begin your presentation with that information in mind.
File number is 24-645. Roll number is 100067761110. Address is 741 Sterling Line Parkway. The assessed value for 2025 is $24,440,000. There's one building on the property and it's 3 stories. The property was built in 2019. There are a total of 133 units. 103 are assisted living and 30 units are memory care facilities. And there are 54 outdoor parking. Page 2 and 3 of my brief shows the subject property photos. And page 4 shows that there's no sales history for the subject property. And page 5 shows the workup for the valuation. So the income approach is based on 103 assisted living units. So there are 3 bachelor suites, 76 1-bedroom, and 14 2-bedrooms. And we assign a monthly rent of $1,315.49. Then we use 3.4% vacancy, 38.63% expense ratio, and 4.6% cap rate. And that gives us $20,954,696. Then for the 30 memory care units, we use the cost approach, and that gives us a $3,485,000, and that gives us a total market value of $24,440,000. And page 6 of my brief shows the comparable rent for the income approach, and the bottom of page 6 shows the cost approach calculation. And page 7 and 8 of my brief shows the cap rate studies. And page 14 of my brief shows the permit for the construction for the property. And page 15 to page 9, sorry, page 20 of my brief shows the property information, and page 21 to page 26 is the income and expense information for the subject property. And that's my presentation.
Mr. Down, any questions for the assessor?
No questions. Thank you.
Ms. McFadden, any questions for the assessor?
No questions.
Ms. DeLauro, any questions?
And I have no questions. Thank you.
There's an additional building value you have in your income summary.
That's correct. That is for the 30 units for the memory care portion.
What is it called? Memory, you said? Memory?
Memory care.
Memory care.
Yeah, so for people who has trouble remembering, so dementias, things like that.
And for that building, you did not use the income approach?
No, because there's no kitchen in the property, so we're using the cost approach, same as the previous property as well as the property after. We should have using the cost approach for the memory care portion of the property.
And that is laid out on page 6 below?
Yes, that's correct.
Is that the entire cost of the building then? Is that
No, that's just the cost portion for the 30 units.
for the 30 units? Okay. Okay, I got it. Thank you. I have no further questions then. Mr. Down, you may begin your presentation.
Okay, thank you, sir. So similar to the prior file, page 2 is street view photos. Page 3 is a aerial shot, property known as Brightwater Senior Living. Page 4 is a map of the property within the city. And then page 5 is the assessment calculation report. So initially we were a bit confused as to what the additional building was. So when we filed the materials, we asked for that to be removed. Since discussing with the assessor, we've kind of figured out what that was for. We have no issues with how the memory care units are assessed on cost at $3.485 million. So just noting on page 6, that issue 1 about additional building, requesting that removed, that can stay on. We have no issues with the additional building. There was just some confusion with initial conversations what that was for. I thought it was some incomplete construction or something that had been left on, but I have no issue with the additional building. And then on the bottom of page 6, again, we review capitalization rates. The subject is assessed at a 4.6% capitalization rate. And similar to the prior file, we've looked at Cushman and Wakefield for seniors housing, 6.5 to 7.25 cap for seniors housing. And then on page 7, multi-residential low rise, 5 to 5.75% capitalization rate. And then on page 8, Colliers is showing for multi-res low rise 5 to 6% cap rate, as well as high rise. So on that basis, on page 9, we are requesting the panel amend the value with a 5% cap rate. And just noting here, our requested assessment, we're okay with the additional building value, the 3.5 roughly, being added back onto that. We have no issues with that. And I request the panel just confirm the class at this time. Thank you.
That means doesn't have to speak a little bit for him then?
No.
Okay.
It's okay for now.
Ms. Tang, any questions for the applicant?
I don't have questions.
Ms. Deloro, any questions?
We may have crossed.
Oh. Something going on today.
Yeah. It's a lucky day. Give it a couple seconds, maybe she'll rejoin. Okay, got her back.
Ms. Tang, any questions on the applicant's presentation? Or sorry, yeah, we went through that already. Ms. Deloro, we were, yeah.
No, I have no questions. Thank you.
Ms. McFadden, any questions?
I have no questions.
And I have no questions. I would like to ask the assessor one more question, though. On the cap rate. 4.6. It's going back to your page 8. The multi-family low rise, the 20th percentile is 4.75. Just wondering why yours is below that amount.
I think it's because the property is fairly new. I think we do have the supporting sales on page 7. So that shows a list of sales. Some older properties do have 3.46%. Even for 2390 McPhillips which would be more compatible. It was built in 2015, and that one has 90 units, and that one has a 4.71% cap rate based on the sales. And this property was built in 2019, so we do apply a lower cap rate.
Okay, thank you.
Could I just ask an additional question, please, Mr. Chair?
For which the assessor or applicant?
For the applicant?
Okay, yes.
So just to confirm, what you're requesting is 19,278,000. Yeah, 278,000 plus the 3,485,000 for 22,763,000. Is that the correct number at the end? What you're asking
Yes.
for?
Yes, it is. Thank you.
Okay, thank you. Thank you.
We get that figure again from you, Mr. Applicant, the final amount?
Okay, let me just quickly calculate it here again. Bear with me.
For the record.
So $22,763,000.
22,763.
That's correct.
Classification confirmed. That will then bring to close item 2, 741 Sterling. We will then move to item number 3, 857 Wilkes Avenue. This is an application for revision of assessed value and for classification of property. Also a pending supplementary request to confirm here. And this is a cap rate only issue, Mr. Applicant. Again.
Yes, sir. Correct.
Okay. So Ms. Tang, you may proceed with your presentation based on that information, please.
File number is 24-647. Row number is 12097806585. Address is 857 Wilkes Avenue. The assessed value for 2025 is a total of 37,512,000. The property, there are five buildings on the property, and it was between 2 to 3 stories. The buildings were built in 1999, and there are a total of 665 suites and 88 outdoor parking. And we are asking the board to confirm the value. Page 3 shows the subject property photos, and page 5 shows the current valuation. So the valuation was split between 121 units, which is assisted living facility, and 144 units, which is also memory care units. So for the assisted living portion, we used $1,076.95 for the rent. Then we used 3.1% for vacancy, 41.22% for expense, and 5.2% for cap rate. And that gives us a 17,128,000. The 144 units are memory care, and we're supposed to be using cost approach just like the previous property. So we are going to be sending the supplementary tax bill to make the correction. And page 6 shows the comparable rent, and 7 and 8 shows the cap rate study. And that's my presentation.
Okay, Mr. Down, any questions for the assessor?
No questions.
Ms. DeLauro, any questions?
I have no questions. Thank you.
Ms. McFadden, any questions?
Will the memory care unit still be exempt, school tax exempt?
No, it wouldn't be school tax exempt. It would be 20T after we make the amendment.
Okay, thank you.
And I have no questions. Mr. Applicant, you may begin your presentation.
Okay, thank you very much. So similar to the previous file, page 2 shows street view photos. Page 3 shows a aerial shot. So the property is known as the Rosewood and the Waverly, quite a large complex. Page 4, location of the property in the city. Page 5, the assessment calculation report, the workup. Noting here that this property is assessed at a 5.2% capitalization rate, but the property is quite a bit older than the other two we were dealing with. So on that basis, we have the same capitalization rate studies on page 7 with Cushman and Wakefield, with Colliers. But because the property is older, we are requesting a 5.5% capitalization rate, so a bit up from the bottom of the range indicated by those third-party studies. So requested value is shown on page 10 with a 5.5 cap. That's $35,466,000. Thank you.
Ms. Tang, any questions for the applicant?
I don't have questions.
Ms. McFadden, any questions?
I don't have any questions. Thank you.
Ms. DeLauro, any questions?
I have no questions for the applicant. Thank you.
And I have no questions. Classification confirmed, applicant?
Yes, sir. Confirmed.
That then concludes item number 3, 857 Wilkes Avenue. And that is, I believe, all of your properties, Mr. Gunn?
Yes, sir. That is. So everyone have a great day. And take care.
Is there anything in summation for your?
Oh, nothing to add. I think it's pretty simple. So.
Thank you very much for your presentation.
Take care, everyone. Bye.
Thank you.
Mr. Horsburgh,
Mr. Berger is available.
I should be. There we go.
Okay, our next item on the docket is item number 4. That is 909 Wilkes Avenue. And this is application for revision of assessed value. Mr. Mohan, would you please swear in the applicant?
Of course, Mr. Chair. Mr. Applicant, please state your full name.
Carson Horsburgh.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you.
So, Mr. Applicant, you are in dispute of the cap rate only on this property, is that correct?
That's correct.
Okay. So, Ms. Tang, if you can proceed with your presentation with that in mind. Thank you.
File number is 24-748. Roll number is 120975296000. Address is 909 Wilkes Avenue. The assessed value for 2025 is $19,587,000. There's one building on the property with 4 stories. The property was built in 2004. There are a total of 118 suites and 43 outdoor parkings. Page 2 and 3 of my brief shows the subject property photos and locations. And page 4 shows that there's no sales history for the subject property. And page 5 shows the workup for the current valuation. So there's one bachelor suite, 72 one bedroom, 45 two bedrooms, and we assign a monthly rent of $1,206.09. Then we use 3.1% vacancy, 47.08% expense ratio, and 4.95% cap rate. And that gives us the total value of $17,692,000. Page 6 of my brief shows the comparable rent for the subject property, and 7 and 8 shows the cap rate studies. And page 14 to 16 shows the subject property income expense information, and 17 to the last page shows the subject properties floor plan and the advertisement. And that's my presentation.
Mr. Horenberg, any questions on the assessor's presentation?
Thank you, Mr. Chair. I have a couple of questions for the assessor. If I can bring the board and the assessor's attention to page 5 of the assessor's disclosure. We have an estimated market value of $17,692,000. And on page 1 of the disclosure, we have a market value of $19,587,000. My question for the assessor, is she making a recommendation to reduce the assessment to $17,692,000, as that is the market value listed on page 5?
I think there might be a mistake on the valuation. So I do apologize. There's a typo on the calculation. So it should be the monthly rent should be $1,335.26. And we are still going to be using the same expense ratio and the capitalization rate and the vacancy rate. And that will give us a total of $19,587,000.
So can you repeat that, please, Ms. Tang?
Yes, the rent per month should be $1,335.26 instead of the $1,206.09.
1,300 what? Sorry?
35 and 20 cents.
Okay. From 1206.09.
That's correct.
And that gives 19,587,000.
That's correct.
That's been noted. Mr. Horsborough, by you then, yeah.
Okay, I have another question for the assessor. If I can bring the board and the assessor's attention to page 13 of the assessor's disclosure. Ms. Tang, Is this your signature and name at the bottom of page 13?
That's correct.
And next to it, is that the signature of Patricia Bishop, an accredited assessor?
That's correct.
And then above it, we have market value is estimated at April 1st, 2023, 17,692,000. Did both you and your co-signing appraiser sign that the value is 17,692,000?
Sorry, it was based on the incorrect calculation from page 5. So we didn't fully review, I guess, the full report before we made the signature. So the certificate should read 19,587,000 instead of the 17,692,000.
Right. And have you provided any evidence in your disclosure in support of the $19 million figure?
Yeah, so I did provide the I guess the rent comparable on page 6 and the cap rate study on page 7 and 8 of my brief.
Okay, and on page 13, we have the certification with 2 signatures in support of the $17 million figure. Is that correct?
That's correct.
Okay, thank you. I just have one more question. If I can bring the board and the assessor's attention to page 8 of the disclosure. Capitalization rate evidence. My question for the assessor, which of these sales is a seniors living facility?
Not that I'm aware of. So I don't know any of them if they're senior housing or not.
So there's nothing in the capitalization rate evidence that supports a capitalization rate for a seniors living facility?
We do treat the senior housing facilities as regular apartment buildings.
Okay, but there's no cap rate sale evidence in support of the cap rate for a seniors living facility.
Well, if we're treating the senior housing as a regular apartment, then all of these cap rate will be supporting a regular apartment cap rate.
Okay,
And but we're
sorry.
the same way.
Okay, so just to confirm, none of those sales were from seniors living facilities.
That's correct.
Okay, thank you. No further questions.
Ms. McFadden, any questions for the assessor?
Just to confirm with the assessor, I think, did you say earlier that you didn't know whether these sales were or were not seniors?
I don't know. I don't know any of them.
Okay. Thank you. That's all my questions.
Ms. DeLauro, any questions?
I have no questions, thank you.
So if you're treating this as a normal market apartment block, are the suites apartment suites, are the suites the same from the seniors housing as they are on the regular market?
My understanding is yes. So if you look at page 18 to 21 of my brief, it shows the floor plan for the subject property. So it shows that there's a kitchen, there's living room, storage, bathroom, which has all the utilities a regular apartment would have.
Are the residents in this facility, there's food service, is that correct?
Not that I'm aware of. Oh, but it looks like there is an extra food revenue from page 15, so I assume they do provide food services.
So would that be a full kitchen then, or would be a kind of a downsized kitchen based on the fact that there is food available in the facility?
It looks like there's a kitchen, like full kitchen. So it looks like there's a stove, there's a sink, there's a fridge in the kitchen from the floor plan.
From the floor plan? So we
Yeah.
said-
Yeah, so from page 18 to 21 shows the different types of the rooms available for the subject property. So it shows that there's a full kitchen, it looks like.
Okay, but are you certain of that, just by looking at that floor plan? Or could those appliances be different than normal? Could it be smaller, fridge smaller, stove smaller? Is that possible?
I'm not sure. I don't know.
Okay. No further questions, thank you. Okay, Mr. Applicant, you may begin your presentation.
Thank you, Mr. Chair. And after the assessors had a chance to ask questions and the panelists had a chance to ask questions, I have submitted rebuttal for this property as well. But I'll begin with my presentation.
Okay.
So if I can bring the board's attention to page 4 of the disclosure. The property has been assessed at $19,587,000. MNP has determined that the market value for the subject property is $16,159,000. And respectfully, we would ask the board to revise the assessment to reflect the fair market value. Moving on to page 5 of the disclosure, we have, and page 5 and 6 has the assessment department's valuation of the property. On page 7, we have MNP's valuation of the subject property. I guess as the previous applicant was discussing, same type of argument where the property has been valued with a below market cap rate, of which there's no support to value a seniors living facility with a 4.95% cap rate. MNP is asking for a 6% capitalization rate, and we have provided evidence in support of that capitalization rate. Moving on to page 8, we have the assessment map of the subject property and an aerial photograph. On page 9, we have some exterior photographs of the property. And on page 10, we do have our cap rate argument. So one of the challenging things with the 4.95% capitalization rate applied by the assessment department on April 1st, 2023, one could get a guaranteed investment certificate with a guaranteed rate of return of 5%. Between April 1st, 2021 and April 1st, 2023, interest rates increased significantly. The capitalization rate reflects risk. If you can have a risk-free return on your investment of 5%, no one's going to be investing in a higher risk type of investment for a lower return. So the economic theory, there's no support for a sub 5% cap rate. So that's one perspective. Moving on to page 11, third-party commercial real estate firms. They deal with sales of seniors living facilities all the time. They have determined that capitalization rates for senior living facilities in Winnipeg as of April 1st, 2023, ranged from 6.5% to 7.25%. Considering that the city has assessed it as an apartment building, well, again, capitalization rates weren't below 5%. They ranged from 5 to 6% as of April 3rd. Again, this is a seniors living facility. the capitalization rates range from 6.5% to 7.25%. They're fundamentally different asset types. I've inspected numerous seniors living facilities throughout the city over a number of years. That Mr. Chair, you'd asked the assessor about the kitchens in the subject property. Kitchens in this type of property are a lot smaller. We can see on the assessor's disclosure that there's hardly any counter space. The majority of people living in these facilities come down to a communal area to eat their meals. These apartments aren't your typical multifamily apartments. They have smaller kitchens. They're designed for seniors. So it's a fundamentally different type of asset. So with that being said, moving on to page 13 of my disclosure. Again, to summarize, it is our position that an appropriate cap rate for the subject property is 6%. And in applying that 6% capitalization rate, we arrive at the requested value of $16,159,000. And respectfully, I would ask the board to revise the assessment to reflect the fair market value. Thank you very much. And with that, I welcome any questions.
Ms. Tang, any questions for the applicant?
One, so do you have any actual sales from the Winnipeg region to support your 6.6% cap rate for what you're asking for?
No, I'm not pointing to any sales. I'm pointing to the third-party market reports.
Okay, but you don't have any actual sales from the market region in Winnipeg to show this to support the 6% or the third-party studies?
I've pointed to the third-party studies. I haven't included comparable sales.
Okay, no further questions.
Ms. DeLauro, any questions for the applicant?
No, I don't have any questions at this time. Thank you.
Ms. McFadden, any questions?
I do have a question. I'm finding this a little bit convoluted. According to the assessor's information that they provided, this is an assisted living facility where people are paying for regular meals and housekeeping as well as the rent for their building. Mr. Applicant, do you have any evidence at all that shows what the rent that they are paying for the physical space that they're in, not including the meals and or are you seem to be quite comfortable that the $1,300 is a rent that they would be paying for these apartments without meals, without services?
Yes, so I represent a number of owners of properties like this. Generally, what they've told me is that the rent, kind of excluding all the extras that they're paying for, generally it ranges from a third to about half of what they're paying every month in rent. So the $1,300 that's been assessed by the city, I'm comfortable with that. It falls within a range that is typical for this type of building.
So just to clarify for me for the distinction here, it's not so much about a seniors building. There are lots of seniors buildings plus 55 buildings where services are not provided, regular market. The difference here is that this is an assisted living facility where services are provided on a regular basis, correct? That's correct. It's an assisted living facility. So it's a different asset type as compared to your typical apartment or a 55 plus apartment building. Okay. And again, just to go back to the two that we've looked at before, this is strictly assisted living, but it's not something that includes dementia care, which was where the city is wanting to assess on a different approach altogether, because it's more like a health facility. This one is just an assisted living. Right. That's correct. Yeah, to the best of my knowledge, there's no dementia care unit within the property. Okay, thank you. Thank you. I just find it confusing when all the terms are sort of interchangeable, but this is a fairly specific type of
Yeah,
seniors building,
it's
not just the seniors building.
well, it's a purpose built for
Assisted living, yes.
Yeah.
Okay, thank you.
Thank you.
So I just wanted to get to your cap rates study, third party, where was that?
Page 11, sir.
11. I left my computer at home, but just FYI. So this encompasses, this was a nationwide study by what is it, CBRE or Colliers, is it?
So Colliers and Cushman and Wakefield both track this. The graph that I've included on page 11 is a Cushman and Wakefield graph. So yeah, that's right. They've got Calgary, Edmonton, Halifax, Kitchener, Waterloo, Montreal, Ottawa, Toronto, Vancouver, Victoria, and Winnipeg is the final one.
Okay, and you're fully familiar with the study. They've taken all of the actual data.
Yeah, that's
Analyzed income and expenses from various properties across Canada in each of these centers. And come up with an accurate cap rate range on that basis.
that's correct. They both send surveys out to owners and operators of seniors facilities, as well as they represent them in sales. So they have that data internally, and they also send out surveys.
Okay. So for Winnipeg was 6.5 to 7.5. I'm just wondering why you chose to go a little bit lower than that range.
Yeah, so I'd considered the 6.5 as a minimum, considering that like the assessment doesn't fully take in perhaps some of the business stuff. I felt maybe 6.5 was too aggressive, because the property does have value, and the way that the city had assessed it with the $17 million figure and that income workup, it wasn't too far off from what we had valued at. So I felt that the 6% cap rate, while it is lower than what the market says, ultimately it did bring us to a value that I felt was reasonable and defensible for the property.
Okay. I have no further questions. Then you're
Sorry,
about.
Mr. Chair, sorry. I do have one additional question.
Sure.
Mr. Horsburgh, the previous building sorry, not yours.
Oh.
Never mind, ignore me.
If you want to ask, I'm familiar with those three properties.
No, that's fine. No, fine.
I could try to answer.
Yeah, no. Thanks very much. Sorry about that.
That's okay. Thank you.
Okay. You can begin your rebuttal then.
Oh, sorry, I just need to send it to the assessor.
And us too.
Yeah, it should be, for you guys. Or now. And Madam Assessor, the email just left my inbox, so it should be arriving to you shortly. Item 4,
Item rebuttal.
yeah. Perfect.
Does everybody have the rebuttal? I see
I do not.
one person is nodding.
I do not either.
Okay.
I've just refreshed and it isn't there.
7. It's not there, it should be the first one of item 4. It's not. In our SharePoint, actually.
Oh, I have it now.
Okay.
Actually, what's confusing me is that I've got
Oh.
two different addresses for item 4.
Oops, that would be my bad there. My apologies.
So I've got 3 things for item 4, but one's for the previous address.
Right. Okay, it's properly updated now.
Okay, got it.
Mr. Laurel, you have it?
I have it, thank you.
Okay. And then you may begin, Mr. Horsbrook.
Thank you. Thank you, Mr. Chair. The rebuttal will be relatively brief. There are just 2 items that the assessor included in her evidence that I want to rebut. So I'll bring the board's attention to page number 4 of the rebuttal. I looked up every single address included as cap rate evidence. I determined that none of the properties were assisted living or seniors facilities, and as well, none of these sales are from the subject neighborhood. So I don't feel that the cap rates evidence supports the cap rate of 4.95%. And then on page 5, I'm rebutting the rent comparables used by the assessor. I looked up every address, and again, none of them were seniors living facilities. So just a very brief rebuttal that I determined that none of that evidence really relates to the subject property. So thank you very much.
Ms. Tang, any questions on the applicant's rebuttal?
I guess just a couple. So do you know what the actual rent the subject property is collecting without food and services?
I don't have that number off the top of my head. However, in discussions, the rent applied by the city fell within a range that we felt was reflective of the actual financial performance.
Okay, and I'm sorry, could you explain, I guess, page 5 of your rebuttal evidence again, please?
Yes, that was just that the rent comparables, none of them were from assisted living or seniors living facilities.
Oh, okay. Okay, no further questions.
Ms. DeLauro, any questions on the applicant's rebuttal?
I have no questions, thank you.
Ms. McFadden, any questions?
No, I have no question. Thank you.
And I have no questions. Anything in summation, Ms. Tang?
No, I'm fine.
Anything in summation, Mr. Horsbrook?
No desire for summation. Thank you, Mr. Chair.
Okay, that then concludes item number 4, 909 Wilkes Avenue. I think a 5-minute break would be appropriate at this point. So we go and recess for 5 minutes.
Mr. Chair, we're live.
Okay, we are back in order now, so we can now proceed to item number 5, 1281 grant. This is an application for revision of assessed value. Ms. Tang, you may proceed with your presentation.
File number is 24-439. Roll number is 1201570620. Address is 1281 Grant Avenue. The assessed value for the assessed value for 2025 is $12,219,000. So there's one building with 5 stories, and the property was built in 1964. There are a total of 100 suites and 60 outdoor parkings. And page 2 and 3 of my brief shows the subject property photos and locations. And page 4 shows that there's no sales history for the last 3 years. And page 5 of my brief shows the valuation. So there are 8 bachelor suites, 74 1-bedroom, 18 2-bedrooms, and we assign monthly rent of $1,101.74. Then we use 3.2% vacancy, 45.1% expense ratio, and 5.75% cap rate, and that gives us $12,219,000. And page 6 of my brief shows the comparable rent, and 7 and 8 of my brief shows the cap rate studies, and page 14 to page 15 shows the income and expense information for the property, and that's my presentation.
Okay. Mr. Horsberg, any questions for the assessor?
Thank you, Mr. Chair. I don't have any questions for the assessor.
Ms. DeLauro, any questions?
For your comparables, are they all the same use buildings?
That's correct.
Okay. Have you inspected this building?
No, I haven't.
Okay, thank you.
Ms. McFadden, any questions?
I have no question.
And I have no questions. Mr. Horsberg, can you begin your presentation?
Thank you, Mr. Chair. I'll just start by saying, similar to the Wilkes property, where the assessor had included an income workup that was inaccurate, I made a similar mistake with my valuation of 1281 Grant, and if you'll allow it, I'll just send the corrected income workup to Zachary, and that could be shared with the panel members if that's all right.
Yes.
Okay, thank you. I have the email prepped, and I just clicked send.
I guess I should. Okay.
It's a corrected submission. Technically, it would be a late submission because it is a correction, unfortunately, so we might have to quickly deliberate it very well. But I can still process it, not an issue.
But I mean, he could do it verbally too, right? And we wouldn't be doing that.
That's true.
So we can just consider this the same.
Yeah, I'm happy to provide just verbally, but if you want just to be able to reference it a bit easier, up to the board if they'll accept that.
Yeah, you know, well, I think we could probably handle verbal. Yeah. I think so. Yeah, let's just do that. Yeah.
Okay, perfect.
If you go, you know, at a pace we can keep up. Not that you're, yeah, I'm not insinuating anything, just for your correction.
Yeah, no, it's just a small error that I made, but I'll start with my presentation.
Okay.
So the subject property again, 1281 Grant, with an assessed value of $12,219,000. On page 3, we've requested a value of $11,305,000. I would like to amend that to $11,491,000. Again, that's $11,491,000. The mistake I made is that I had accidentally deducted the vacancy allowance from the potential income. So the actual potential income that's been assessed, it reflects the actual financial performance of the property. So I'm not disputing the income that the property had been assessed with. I am disputing the vacancy allowance. The actual vacancy expense amounted to 4.24% of potential income, with a total vacancy allowance of $56,002. So on page 5 of the disclosure, you can ignore the first half, the potential income, that part, the vacancy allowance. However, the percentage changes, but the actual number, that $605,320, that's the other item that we're disputing. So the property has been assessed with an expense allowance amounting to $577,181. In reviewing the actual financial performance of the property is incurring expenses of $605,320. With the vacancy allowance corrected and the actual expenses, we're not disputing the capitalization rate. And in dividing a net income of $660,766 by the capitalization rate of 5.75%, we arrive at the requested value of $11,491,000.
What was the NOI again, please?
The NOI $660,766.
Okay, and that's because of the change in the vacancy allowance rate.
That's right. Yeah. So I had incorrectly, deducted that vacancy allowance from the potential income. So that's where the error was made. But moving on to page 6, we have the assessment map aerial photograph. On page 7, exterior photograph of the property. On page 8, we have some sales of apartment blocks throughout Winnipeg. The requested assessment, this will be slightly higher now, but the requested assessment, our requested value amounts to approximately $113,000 per dwelling unit, which falls in line with what older apartment blocks in Winnipeg are selling for. On page 9, we have the property's income and expenses. So we have that vacancy expense that was deducted by accident. That was a mistake on my part. On page 10, we have the actual expenses. I believe the assessor included that same expense breakdown in her disclosure. And then on page 11, the value conclusion. Again, we've revised that requested value from $11,305,000 to $11,491,000. And with that, respectfully, I would ask the board to revise the assessment to reflect the property's actual financial performance. And I would welcome any questions, as I hope that was clear, but please, I would welcome any questions. Thank you.
Ms. Tang, any questions for the applicant?
Yeah, I'm sorry. What was your NOI again?
So revised NOI $660,766.
Okay. So I guess the information that you provided is only for 2022. Would that be correct?
One sec.
The expense information on page 9 and 10.
It's for the year ending December 31st, 2022. So a few months prior to the effective date.
Okay. Do you have any information from 2021 and 2020 or any previous years?
I haven't included that in my disclosure. No, I'm not certain if we have that information or not.
Are you aware that in 2021, the subject property has a net operating income of 750,000? 2021?
Sorry, where is that in my evidence?
It's not in your evidence, but I'm just wondering if you're aware that's the subject property's past performance.
Is that in your evidence?
No, but I'm just wondering if
No,
you're aware.
I would object to that question as you're introducing new evidence.
Okay, I don't have any other questions.
Ms. McFadden, any questions?
So I'm not sure if I've missed something here, but what you're telling us with your verbal evidence is that you incorrectly deducted vacancy allowance. Isn't vacancy allowance always deducted?
Yes, so I had
Is it the amount or what are we talking about here?
so I had originally I had disputed the potential income. But the only reason I had disputed that potential income was because I had accidentally deducted vacancy from it. So in reality, there's no issue with the income. The actual vacancy is slightly higher than what the city's assessed it at. So in changing that, it raises what we actually feel that the market value is for the property. So I know it's just
Sorry,
it's a bit confusing.
I'm having trouble following this because it seems to me if you're increasing the vacancy, which you're telling us you're increasing vacancy, the assessed value should go down at the end, not up, because you deduct more vacancy allowance than you previously would have deducted, which would give you a lower net income, which would give you a lower assessment. So I maybe missed something in what you said, but I'm not following that logic.
No, sorry. I'll try to explain it better. So the potential income of the property at $1,322,088. That's fine. Originally, I had thought that the potential income for the property was lower. So my original
Okay, you thought it was 1,296,000, right?
yeah. So I had
Okay.
deducted vacancy twice. So that's
Okay.
I
Okay,
deducted
I
vacancy.
see what you're
So,
saying.
yeah.
All right,
And
thank
for
you.
the sake of fairness and everything, we can't deduct
Yeah,
vacancy twice. I hope that makes
thank you.
Yeah.
Yes, that helps me enormously. Thank you.
Good. Thank you.
That's all my questions.
Ms. DeLauro?
This building was built in 1964. However, I do see on your page 10, you have a number of items that are listed for refurbishments, flooring, plumbing, etc. Can you speak to the condition and the quality of the property?
Yeah, certainly. So in discussing with the manager of the property, the vast majority, I guess all of the units are subject to rent control. And so the work that's being done, the property hasn't been substantially renovated. It's more, these expenses more are just with the reality of the property being over 60 years old. They have to do certain things. Some of it's common area, some of it's units, wear and tear as tenants move in and move out. In general, it's none of these are really capital expenditures. It's just that the property is getting older and they're having to invest in some of this stuff and just basic wear and tear items for the most part.
Okay, thank you. That's all my question.
Actually, sorry, I have an additional question, Mr. Chair.
Sure.
Sorry, I'm so confused today. Your cap rate of 5.75 on a building that's built in 1964 versus your last building, which was 2004 at 6. I wonder if you could give me a little bit of an explanation for that.
Yeah, absolutely. So I'm pushing for the 6% cap rate on the previous property because it is an assisted living facility and the market views it differently. The third-party market reports all point to these properties selling at an above 6% capitalization rate. For the subject property, it's just your typical multifamily building, and there's market evidence and third-party reports that show that 5.75% falls within the typical range for that sort of building.
Okay, thank you very much. That's all my questions, Mr. Chair.
Okay, I still have to go back to your page again one more time. You did say you changed the vacancy to 4.2% though, right?
Yes, so I had accidentally deducted vacancy twice. So the 4.24%, that's the actual vacancy for the property, the actual vacancy expense.
So that's the figure you used to begin with, though? Is it 4.2?
So I had deducted the so I deducted the 4.2, and then I had deducted a second time the vacancy allowance that was applied by the city.
Okay, so why is just a 3.2 then is just a mistake in there, typo mistake?
Yes. Yes.
Okay.
So if Zachary, if you're okay with it, he ends up sharing the revised income workup, maybe it'll make things a little bit more clear. But yeah, so in reviewing the income is fine. It was just that I had deducted vacancy twice. And now we're going off of the actual vacancy.
Okay, I have no further question. Anything in summation, Ms. Tang?
Thanks.
Anything in summation, Ms. Horst, Mr. Horstberg?
No desire for a summation. Thank you, Mr. Chair.
Okay, that then includes item 5/12/81 grant. Moving on to item number 6, 585 Fallon Tray. This is an application for revision of assessed value. Ms. Kang, you can begin your presentation on that property.
File number is 24-936, roll number 0309301090. Address is 585 Ballantrae Drive. The assessed value for 2025 is 13,765,000. The subject property has one building with 5 stories. It was built in 2022. There are 54 and 106 outdoor parking. Page 2 and 3 of my brief shows the subject property photos and locations. And the subject property was sold in 2021, before the building was built. Page 5 shows the permit for the property construction. And page 6 of my brief shows the workup information for the valuation. So there are 16 one-bedroom, 38 two-bedrooms, 10 three-bedrooms, and we assigned a value of $1,439.65 for rent. The 3.1% vacancy, 38.97% expense ratio, and 4.75% cap rate. And that gives us a $13,765,000, which works out to be about $215,078 per suite. And page 7 of my brief shows the recent apartment sales information. So we can see that the new construction apartments were sold between 265 and 740 per suite to about 283,648 per suite, which are all higher compared to the subject property assessment. And page 8 of my brief shows the comparable rent, and 9 and 10 shows the comparable, shows the cap rate studies. And there is no income expense information considering the age of the construction. And that's my presentation.
Mr. Horsberg, any questions on the assessor's presentation?
Thank you, Mr. Chair. No questions for the assessor.
Ms. McFadden, any questions?
I have no questions.
Ms. DeLauro, any questions?
And I have no questions. Thank you.
And I have no questions. Okay, Mr. Horsberg, you may begin your presentation.
Thank you, Mr. Chair. So I'll begin. We are discussing 585 Ballantrae, bit of a strange street name. A lot of these new developments, they seem to have strange street names. Anyway, that's neither here nor there. Moving on to page 4 of the disclosure, the subject property is a 64 suite multifamily property. The property has been assessed with a value of $13,765,000. MNP has reviewed the property's financials as well as relevant market data, and we have determined that the market value is $10,846,000. On pages 5 and 6 of the disclosure, we have the assessment and taxation, income valuation workup. And on page 7, we have MNP's valuation of the subject property. The property has been assessed with a potential income of $1,105,651. In reviewing the property's actual financial performance, the subject property has is only achieving potential income of $995,647. Actual vacancy amounts, or the model vacancy 3.1%, is accurate for the property. However, we are disputing the expense allowance. The property has been assessed with expenses of $417,515. In analyzing the actual financial performance of the property is incurring annual expenses amounting to $567,317, which results in a net operating income of $397,491. And the city has again applied a sub 5% capitalization rate for the subject property. In reviewing relevant third-party market reports, MNP feels that a capitalization rate of 5.25% is accurate for the subject property. Moving on to page 8, we have the assessment map and aerial photograph of the property. On page 9, we have an exterior photograph. On page 10, we have the income and expense questionnaire that was sent to the City of Winnipeg Assessment and Taxation Department, which shows why we are going with a total potential income of $995,674. And then on the other column, annual expenses, we have the total property expenses. And of course, we have deducted the mortgage interest expense in determining the total expenses for the property. So on page 11, we have the revised expense statement with the mortgage interest expense removed. On page 12, again, regarding the capitalization rate applied, it's out of line with the market at a time when between April 1st, 2021 to April 1st, 2023, interest rates increased at an unprecedented rate. No one, from an investment perspective, no one would be investing in an asset where they were going to get a sub 5% return when you could go to RBC, TD, Scotiabank, anyone, and get a guaranteed investment certificate providing you with a 5% return, zero risk. So again, the sub 5% capitalization rate is out of line with the market. And respectfully, I would ask that the board revise the assessment to $10,846,000. With that, I would welcome any questions. Thank you very much.
Ms. Tang, any questions for the applicant?
Yeah, so I guess on page 13 of your brief that shows up. So I guess the potential rent, the expense ratio, that is based on your page 11 and sorry, 10 and 11. Is that correct?
That's correct.
Okay, so on page 10, I guess that picture shows the information on the top. It says the 12-month ending in January 31st, 2024. So that's post-reference information.
So with regard to the date, the property is new. So if we were to go off of the 2023 financials, the property wasn't fully leased. So while that information is post-reference, the alternative is no information because the property wasn't fully leased. So we don't actually know what the financial performance of the property would have looked like. So this gives you an idea as to what the property looks like, fully operational. If we were to look at the previous year, they were still leasing the property up, and the financials don't really provide the city with any information. The financials don't provide us with any information. Going off of financials where the property is still leasing up, it doesn't really show us what kind of financial performance the property is achieving.
And do you know when exactly the property was fully leased?
Not off the top of my head.
And do you have any market information to support your rent or expense ratios?
I'm going off of the actual financial performance of the property.
Right, the future performance. I guess the post-reference performance.
Yes, I haven't pointed to the market to determine the lease and the rental and expense information. I'm going off of the financial performance.
Okay, and for your cap rate study is also based on the third-party information as well?
That's correct.
No questions.
Thank you.
Ms. McFadden, any questions?
I have no questions. Thank you.
Ms. DeLauro?
I have no questions. Thank you.
Page 11. I went through the arithmetic here on the chart here. And I do not get 567. I get something considerably lower. Can you speak to that or check that?
I'll double check that. If you give me a moment here, I'll open this up. Yes, I apologize. It seems that on that chart, I haven't removed
Like the
the,
mortgage interest isn't taken off, but after all,
that's right. Yeah, I just ran the numbers again and it seems that I did not remove that. So I apologize for that. Excel, sometimes Excel is my best friend, sometimes it's my worst enemy.
do you need a recess to recalculate everything or?
Yeah, I mean, if you would give me 5 minutes, that would be okay.
Okay. Also, just one more thing before we do, the income and expense mailer that you attached as well. It has a total expense, okay, this is with the mortgage interest in there, it has a total expenses of 593, 624. And it doesn't match that figure of 567, 317, even though it's using the same numbers, so.
Yeah, that something's off with these calculations.
That might mean something is off on the mailer itself, though.
Yes, that could be.
Okay.
Yeah, if I can have 5 minutes, I'll give the board a
Okay.
revised value if that's okay.
Okay,
Okay, thank you, Mr. Chair.
go into recess then.
Okay. Okay, I'll be right back. All right, Mr. Chair, we're live again.
Okay, we are back in order. Do you have, can you quickly go over the new numbers that you have there on page 5, or how do you want to do this?
Yeah. So thank you, Mr. Chair. Terribly sorry about that.
Well,
So looking at page 13, if we see capitalized value, and then we have 7,571,000, and then we have estimated market value 10,846,000. So I had my Excel spreadsheet set up so it was putting in the expense allowance of 567,317, and that included the mortgage interest. When we deduct the mortgage interest, we end up with total operating expenses of $395,409. And then we end up with a net income or net operating income of 569,399. That number divided by the capitalization rate of 5.25% gives us the 10,846 number. So I should have noticed here that capitalized value was different from the estimated market value. So in my determination of the estimated market value of 10,846, that was including the correct expense allowance. So I apologize for that. I emailed Zachary the revised numbers. It's at the board's discretion if they'd like to look at that or allow that. So ultimately that 10,846 number, that is correct. That is based off of the actual financial performance of the property. However, it's that I had included the expense allowance, which includes mortgage interest. That's where the mistake came from.
the corrected NOI is 569,399.
That's correct.
Sorry if I may. Mr. Horsberg, so with that submission that you gave, do you want it to be considered as an exhibit? Because if that is the case, then it would be a late submission that they would have to deliberate on.
Yeah, I'm kind of, I'll leave it to the board. If it makes sense the way I'm describing it, that's okay. But if it would be easier to just see those numbers, then I would be fine with it. We consider it a late submission and the board can deliberate, but I'll leave it to the discretion of the panel.
I think we're okay the way it is. Yeah.
Okay.
So if you can just it's 569,399. And the cap rate is 5.25.
25.
Where did I get 5.5? Oh, I'm in. Excuse me. Okay. Okay, I have no further questions. Anything in summation, Ms. Tang?
We would like to reject the any information provided by the applicant regarding to the calculation reference information. The reference date for the assessment is April 1st, 2023. So any information after the reference date is not available at the time of the assessment, and it shouldn't be included in the it shouldn't be used for the reassessment or any calculation.
Okay, that is noted. Anything in summation, Mr. Horsberg?
Thank you, Mr. Chair. In summation, I want to apologize again for the mistake and adding a degree of confusion here. With regard to what Ms. Tang had to say, the information provided, that's the only way we can have an idea as to what the financial performance of the property is. It's a kind of a unique situation where it's a new property. The alternative is no actual financial information. So thank you to the board for their patience with me, and thank you for your consideration.
No problem. That then concludes item number 6, 585 Ballantrae. We will now move to item number 7, 595 Ballantrae. This is an application for the amount of the assessed value. Ms. Tang, you can begin your presentation, please.
File number is 24-936. Roll number is 030930100090. Address is 585 Ballantrae Drive.
Is it 595 or?
590. Oh, I'm sorry, I printed out the wrong brief. I'll just present with the electronic version. The file number is 24-935. Roll number is 030930100085. Address is 595 Ballantrae Drive. The assessed value for the property is 13,729,000. There's one building with 5 stories. The property was built in 2021, and there are 64 suites and 106 outdoor parking. Page 2 and 3 of my brief shows the subject property photos and locations. And again, the property was sold in 2021 prior to the building was built. And there is a construction permit on page 5. And page 6 shows the income valuation. So there are 16 one-bedroom, 36 two-bedrooms, and 10 three-bedrooms. And we assign a monthly rent of $1,437.46. And we use a 3.1% vacancy rate, 39.04% expense ratio, and 4.75% cap rate. And that gives us $13,729,000. And again, page 7 shows the recent apartment sales, which is a lot higher compared to the our assessment value. And page 8 shows the comparable rent. And page 9 and 10 shows the cap rate studies. And that's my presentation.
Mr. Horsberg, any questions for the assessor?
Thank you, Mr. Chair. I don't have any questions for the assessor.
Ms. McFadden, any questions?
I have no questions. Thank you.
Ms. DeLauro, any questions?
No, I don't have any questions. Thank you.
I have no questions. Mr. Horsberg, you can begin your presentation, please.
Thank you, Mr. Chair. So the property we're discussing today, 595 Ballantrae, with an assessed value of $13,729,000. If the board will follow me to page 4, again, this property is 64 suite multifamily property, assessed value of $13,729,000. During the recess we had on the last property, I went through my numbers for this property as well, and this one I can confirm the numbers are right. So thank you for that again. Moving on to page 5 and 6, we have the assessment and taxation income valuation of the property. And on page 7, we have MNP's evaluation of the property. With regard to the potential income, in reviewing the financials of the property, we found that the assessed income was accurate and reflected the actual financial performance, so no dispute there. However, the actual expenses being incurred by the property are somewhat higher than what they were assessed at. And as well, with regard to the cap rate, I'm probably starting to sound like a broken record. But the 4.75% capitalization rate is out of line with the market, whereas the requested capitalization rate of 5.25% is well supported by market evidence. So in dividing the net operating income of $534,640 by the capitalization rate of 5.25%, we arrive at the market value of $10,184,000. Moving on to page 8, we have an aerial photograph and the assessment map of the property right next door to the previous property on the docket. On page 9, we have an exterior photograph. And on page 10, we have the actual expenses being incurred by the property. And I did double check these numbers. So the property has been assessed with expenses of $417,629. The actual expenses being incurred in running the property, and this, I did deduct the mortgage interest this time. So total expenses, $535,106. Moving on to page 11, again, between April 1st, 2021 and April 1st, 2023, interest rates were increasing. Maybe I won't give my entire presentation again on capitalization rates, but third-party reports all point to capitalization rates for multifamily properties in Winnipeg as of April 1st, 2023, ranging between 5 and 6%. So the 5.25% that we're asking for, that falls in line with the market. So again, in valuing the property based on the actual financial performance with a capitalization rate that's supported by the market, we arrive at the market value of $10,184,000. And respectfully, I would ask the board to revise the assessment to reflect the fair and accurate market value for the subject property. And with that, I would welcome any questions. Thank you very much.
Thank you. Ms. Tang, any questions for the applicant on the presentation?
Yeah, so on page 10 of your brief that shows the expense information, which year is that expense based on?
So the property was constructed in 2021. My understanding is that these documents are from 2023.
Do you know which month, like which period that was from?
Like the year-end date.
That's correct.
That I don't think, does it say? I don't think it says on it. I would tend to think it would have been December 31st, 2022. That would be my best guess, but I don't see the date on it. And I don't remember off the top of my head.
And basically the information is only based on 1 year. And you're not considering any other year's information, is that accurate?
Well, we have the effective date, April 1st, 2023. The property was only kind of opened up in 2021. So we don't have a whole lot to go off of.
Are you aware that based on our records, this expense was based on was ending in January 2024?
And sorry, is that evidence in your disclosure?
No, but I'm just wondering if you are aware that this figure is from January 2024 of their
Sorry,
expense.
but where are you going off of for that?
The $755,231.90 is from January, is ending in January 2024. Are you aware of that?
I'm not aware.
Okay, no further questions.
Ms. DeLauro, any questions?
I have no questions, thank you.
Ms. McFadden, any questions?
I just have one. The assessor presented information about a sale. Do you have any comments on that sale? Do you have any information about that particular sale? Because it is quite a different number.
The sale that the assessor included, I think that was just for the land, the $2 million one.
Okay.
Yeah, on the assessor's page for 2,009,000, January 12th, 2021. Yeah, I believe that was the land parcel that was sold.
Actually, I'm talking about the information she presented on page 7.
Oh, sorry. Yeah, I wasn't aware of those sales. 148 unit, 143 unit. Yeah, my only comment would be that they do seem to be significantly larger than the subject property. But
Okay.
yeah, I'm not overly familiar with those sales.
All right, thank you.
Thank you.
So just getting back to the page 10 expenses. Would it be fair to say then that you're not sure what period these expenses are pertaining to?
Yeah, I don't know off the top of my head. If Ms. Tang's saying they're from the most recent year, that's possible. Again, just because the property's newer, it would probably be the same situation as 585. I think they were developed in tandem. Off the top of my head, I don't know, but again, with it being a newer property, whether this information is some of it may be from post April 1st, 2023. However, given that the property is newer, these numbers provide an accurate financial picture for how the property is performing. But off the top of my head, I don't know the exact date that those numbers are from.
I have no further questions then. Anything in summation, Ms. Tang?
No, I'm fine, thanks.
Anything in summation, Mr. Forsberg?
I have no desire for summation. Thank you, Mr. Chair.
That then will bring to a conclusion item number 7, 595 Balling Trade. So there, we have heard all of the items scheduled at this hearing, and it is now adjourned. Thank you very much for your presentation.
Thank you.
Thank you, Ms. Tang, and thank you to you, Mr. Chair, and thank you to the panel members as well.
You're welcome.
Have a good day, everyone.
You too.
Thanks. Bye-bye.
Bye.
Thank you.